Welcome back to the Fail Breakdown channel. It's Tuesday, the January the 27th, 2026. Today we're recording this in the morning. We're just going to do a trade recap of the 69.97 fail breakdown, a relatively low volatility fail breakdown of a kind of a shelf of lows or a cluster of lows, at the top of quite a decent move the last couple of days. So up in thin air. So we'll just be looking at how to trade those type of scenarios. They do set up quite often after these big moves up, so it's definitely one to study and learn and try and adapt the system for it. But as always, if we follow Adam's rules, usually works out more often than not for the better. So speaking of Adam, we're just doing our best to relay everything he's taught us over the last few years. So, but neither of us are experts here. So we'll be interested to see what he says later, whether he took this trade or not. It was one of his planned trades and one of his levels he was tweeting out. So yeah, I suspect he probably did get in on the 97. All right, let's drag in the.
Um, do you want to discuss the evening 7782 first?
Sure, yeah, let's go into
Um,
that. I haven't put it on the front page here, but that's fine.
okay, because that's the one I ended up taking, so I can kind of just run through my thought process as I ended up being a little desperate, I guess, last night. But
Yeah, but that was one. The acceptance was really good, right? So it's.
yeah,
I was
yeah. So
looking at
that
it
that
and I was like,
that's kind of what I liked about it.
yeah, it was tempting. I was just didn't really feel like the evening dose of cortisol or whatever it's called. Um, so yeah, I got the chart up here. So I've got the 15 minute. I've got the 4 hour on the left, just for kind of getting our bearings. But you want to take it away, and I'll just kind of draw on the screen as
Yeah,
you
yeah.
talk through it.
Um, yeah. So. We had two potential spots last night. Not the highest quality, obviously, after a big rally like this. But potential spots where you can kind of watch and see what price does. Usually after big rallies like this on the evenings, I tend to just sit out for the most part and wait for new structure to form and take something in the morning. But I did have alerts here for 82 and 76, so I was just kind of watching. More so, I was watching 76. So, off the open, we actually put a nice wick down to 72 and immediately kind of reclaimed, right? You kind of got that classic rubber band effect where you lost the low by a few points and like immediately within a minute or two, you kind of got right back above. And we actually back tested 82 and sold off. So at that point, couple of options, 77, 82. There's a little bit of structure there at 82. So if you're taking the 77, you have to kind of trim at 82, or you can just wait for both to clear and take that. So me personally, just, given the lower volatility and just where we were, I was kind of okay taking the safer entry, waiting for that 82 structure to clear. So we had some nice, type 1 rejection there at 615 from 82. And then as well, we started putting in some type 2 acceptance of the 76, 77 shelf there. We got another rejection at 7 p.m. from 82. And then eventually we're able to kind of start getting above by 7:15, 7:30. And so I just took the long there. Smaller size for me. What I do on these is I just take it usually up to 25% on the runner and we'll just bring it back down to 10%. So, because of that type 2 acceptance there of 76 and then also that type 1 of 82, I felt pretty good just to take that small sized above 82 on the long at 7:30ish and that worked out actually quite nicely. I checked back a couple hours later and we were essentially all the way back up at the highs of the day again at 7,000. So that was good to see.
Yeah, just a straight run up. I suppose what was nice about this, we got a pretty decent flush right at the open, happened very quickly, and then also the recovery of 77. But the back test of 82, when it hit that, it dipped, it held 77 again perfectly. So just showing that sellers really didn't have much in it, not much to get beyond one level down after it back tested 82 and then just started working its way back up. I'm just looking at the 3 minute chart here just to kind of show the swing. So one in the after close, then two right after the open, three, four nice dips and sells off it, and the last three kind of each had higher lows that came along with it. So we dipped to 77, then to about 77 and a half, and then about 80. So yeah, pretty straightforward, huh? Nice evening trade.
Yeah. Yeah, ended up being a really nice one. And then, ultimately for me, because of that, I've just been able to hold my runner here. So I did not end up watching this 97. So I'll be curious to kind of see your thought process behind this one since I
Yeah, so
wasn't
let's
really
zoom
watching
in.
it.
So I was flat coming into the morning, just winding forward, and obviously we're up here in the heights. There wasn't going to be much of quality up here, but we often kind of see this after these big rallies up where we form that overnight shelf, and then put in a bit of a flush underneath it. Not a particularly significant flush. So for me, I actually traded the 94 level. Maybe that was an maybe that was an error on my part. Adam had highlighted 97 in his trade plan from last night, but I like the fact that we had three touches of the 94 from the London session, all bouncing off it, and then one more in the pre-market. All small little bounces, none of them in their own right meeting the criteria of a significant low, but combine them together to get a shelf or cluster of lows, however you want to call that. And so we started dipping underneath that into the just before the open, kind of recovered, chopped around a bit, and then you can't really see it in this. I'll switch over to the range chart, but let me just zoom in a little bit and get rid of all this crap I put on the screen. So I was really just watching the type 2 acceptance that happened around the 94 level. Honestly, I think the better trade in hindsight was trading type 1 acceptance of the 97 level. But like I say, I was watching that significant low. So here we dipped beneath to 94 to 91, kind of popped back above, dipped again down to 88. So here's kind of an interesting discussion, not just related to this trade, but when do you kind of reset the acceptance here? So, we made a lower low in these dips. For me, this was only a couple of points, and so I was kind of happy to include all this. And then we pushed back up through again, tagged 97, dipped to 94, and then as we started lifting off 94, that's when I got in right around 95, 95 and a half. So that's kind of how I saw it. Lower volatility, lower quality level overall. So you can be tricky. You sort of have to shrink down. I think these what you can expect to get out of each one of these selling rotations, and just accept that it's not going to be the highest quality trade here. Yeah, I could bring in the range chart, but there's not a huge amount more to see on the range here. Everything's in pretty microscopic scale here. But there really just, I'll just touch on the delta. There really wasn't much coming in on the aggressive selling side, so that gave me a bit more confidence to engage up here with this lower quality level. And yeah, paid out nicely. But like I say, I do think the better trade was actually at 97, just following Adams levels. And here, the acceptance is type 1, much clearer. Using the same dips, we dipped to 91 ish, back tested 97, dipped to 88. And then when we push back up through, another little wiggle there, and very straightforward entry around 98. 98 first target up. I can't remember where it was, but maybe target that high from just before the London Open. So
Yeah, no, I like that that now that I'm looking at it in hindsight here, I think that 928, 930 dip essentially off of 97, you only lose it by a couple of points, and then you get back to 97, and you actually lose it again by 4 points down to 93. So you get a little tiny rejection again. And then, by like 945, 948, you're really able to kind of, start sustaining above 97. So that's
Mm,
kind of probably where I would have started to look to be interested in that one. But
yeah,
definitely, it's a little bit of a minor one that kind of took off quite quick.
yeah. If I had to guess, I don't know. Adam maybe got in at eight. Sorry, 949, 950, something like that. Unless he waited for this big swing up and took kind of the back test. Yeah, where we pushed up to 90707 and back down, but I don't think he would have done that. We'll see. Maybe he didn't trade it at all.
Yeah,
Okay.
he could have just been holding his runners, honestly, because I know, for at least from the newsletter, it didn't look like he was too interested in taking anything up here. I don't know if context changed for him this morning at all by a little bit. Maybe just, he saw a little bit more sideways basing. He liked it a bit more.
Yeah, I think
But
that
who
would be the
knows?
thing. That's what he talks about to reset is either a scary reset in price or in time. And here we had a little bit of that resetting in time.
Yeah,
Keyword
because we
being.
did we based quite nicely overnight. I mean, it was just kind of, you could tell buyers were just holding that 97
Mm-hmm.
zone.
Yep, classic kind of bull flag here between 94 and call it 704. Quick flush beneath, and then run all the way up through the top of the flag and the breakout. So, will be interesting to see if we can hold above 7,000. We've had a few pokes above it in the last couple of weeks, which have all ultimately failed. We've now got the top of the bull flag somewhere down at the 94 ish level, 94, 97. So, right where we've traded today. So, let's see what the news events bring in the next couple of days. I think we got the president speaking at the end of the day, and then FOMC tomorrow, and then unemployment the day after. So, yep.
Yeah, sounds good.
Mm-hmm. Fairly straightforward, I'd say. You just need to kind of dial everything back in terms of what you can expect to get out of these rotations based on the volatility. And if you don't want to trade it because it's low volatility and it's a lower quality level, then no problem. Just wait for the higher volatility, stronger levels lower down when we get that
Yeah,
rejection later on. So no.
the biggest thing though is I think you have to actually internally be okay, right? If you're gonna make that decision, which again, by the way, is not a bad decision by any means. In fact, a lot of times it's actually probably the smarter decision. If you then do see a follow through like this, right, where it's like, oh wow, off a low quality, we're now up like 20, 30 points, you have to be very well okay being like, okay, I still have no emotion. I'm not attached to the fact that this actually had good fall through. I'm not in it. What will kill you is if you say to yourself you're not interested in low volatility, and then you look later and price has made a good move, and now you're in a situation where you're like, I want to get in, I want to chase, and that's what can lead down to you potentially now engaging in something that you shouldn't be.
Yeah, for sure. And vice versa, if you're committing to a lower quality trade, still just run it through the levels. Um, don't feel like you need to pinch it off too soon or flatten it because it's coming back to your entry. Just follow the system, trade level to level. But yeah, that's I think that's it for this one. Hoping
Sounds good.
for some increase in volatility in the next day or so. Let's see.
You're not okay with just holding a runner?
Uh, yeah.
Actually, it's getting a little boring. Can't lie.
That's how it's supposed to be.
I mean, the last, like, especially the last 2 days, I've kind of, as after the Sunday night kind of dramatic breakdown, it's kind of just been just sitting doing really nothing,
Mm.
which is actually good trading. I mean, that is kind of part of the game. Just to zoom out, I think on one last note to end here. This is a very, very textbook setup that I think if you zoom out, is kind of cool to note with it. The Sunday night, essentially, you just get this massive liquidity trap right under this bull flag structure and this higher time frame, essentially range we'd been in from like 69.25 to 7,000 and 4, which is the top of the flag. We just been in this range essentially since the start of January. And you get this textbook failed breakdown liquidity sweep off of it, reclaim, and then that kind of gives you the power here to test the top of the structure. And now we're trying to see if we can break out of that structure. So just a really, really nice example of like kind of what that high time frame liquidity sweeps look like of these bigger structures.
Yeah, that's why you definitely don't want to miss out when the context and the kind of that's why we've been bringing up those where we are relative to the daily and the 5 day range. It's like when we're down at the bottom, that's definitely when you want to be maybe a bit more aggressive about your entries and clinging on to those runners for dear life for as long as you can, giving them the most space to work as they need. Obviously, this one really didn't need any space, but yeah, that you can see all the structure. I've got the 4 hour up here. So we kind of had bull flag within a bull flag. We had this little grey one between 25 and 64. And then the larger one is the blue one. We actually kind of flushed them both, flushed through the big one, and then straight back up to the top. It's yeah, fairly common pattern. Okay, well, thanks for joining me as always, guys. We'll catch you in the next one. See you in the Discord. Bye for now.